Hi, it's Brian Decker with your Market Minute. Want to talk to you about this last week where we had the technology group get hit pretty hard. In fact, the earnings were fantastic. So what's going on? Sam Altman, he's the OpenAI CEO, said his company was the world's largest private venture, quote, won't be profitable for years. Over the past couple of days, a few AI favorites released their earnings. While they showed huge growth on both top and bottom line, the shares fell after the announcement. In short, investors are expecting more and more from these companies. For example, Palantir Technologies, PLTR, which provides advanced software to the federal government, police, and corporate clients that use AI and other technologies. Palantir beat Wall Street expectations on both earnings and revenues, with sales jumping 63%. And passing $1 billion for the first time, and net income more than tripling. On the surface, that looks like a great quarter, but the stock fell 8% last Tuesday and down slightly Wednesday and took another 7% hit on Friday. The story was the same for chipmaker Advanced Micro Devices, AMD. AMD beat analyst estimates on the top and bottom line, with revenues jumping 36% for a quarterly record, but the stock still fell about 3% Wednesday and another 7% on Friday. AMD forecasted revenues of $9.6 billion in the fourth quarter. That's still a strong growth rate of 25%, but that's a slowdown. Here's the key. That's a slowdown from the growth rate last year of 36%. And that's not what investors want to see in what is supposed to be the AI hyper-growth phase. In an interview over the weekend, Sam Altman got defensive after being asked a simple question. How can OpenAI fund $1.4 trillion in spending commitments on only $13 billion in revenue? And in his quarterly letter to shareholders, Palantir CEO Alex Karp said it's difficult, quote, it's difficult for outsiders to appraise our business. Well, not really difficult. The price earnings ratio is an insane 460, and the price to sales is at 130. Palantir's sky-high valuation and AMD's slowdown in top-line revenue growth are the reasons for the tech hit this last week. Companies with solid and real AI businesses will be in great shape over time, just like the tech bubble of 2001 and 02. But many others, though, could lose all their value and cost investors dearly. Here's the key. Our momentum strategies will allow us to be in the winners and not get caught in the losers. So it's Brian Decker. Hope you have a great week.